Hi everybody, thank you for joining us. This is Sanjay Swamy and I'm a seed stage angel investor and I do a lot of work in the payment space. Glad to have you all join us today along with my fellow panelists. We have Vasu, who is the founder of BillDesk, one of the largest payment processors here in India. Hi Vasu, welcome to the show.
Hi,
we have Krish from ChargeB, who is an entrepreneur based out of Chennai and doing a lot of work in the recurring payment space. Hi Chris, welcome to the show. And we will be joined by Amitabh Tewary. He is running a little late, but will join us soon. And Amitabh used to work at Mastercard and is now working at a startup, but will give us some of the background about his experience from his Mastercard days. Right. So the topic that we will talk about, and as we go to each of my fellow panelists, I'll let them introduce themselves and talk a little about their business, and then get into the Q&A. The topic for today is recurring payments in India. Why not? Right, and that immediately implies that we're saying that it's not possible today, which is not necessarily true. But there are several situations where it doesn't seem like it's possible today compared to what's allowed overseas. And so the question is really about understanding what is allowed, what is not allowed, and then talking about what is allowed today and what could be done in order to enable them where it's not currently allowed. Okay, so that's the background. So broadly, if you think about it, payments are between the customer and the merchant or customer and a business. If you're face to face, the customer is present at the time of the transaction and may use a Visa or Mastercard or a RuPay card or an American Express card. We are assuming that those are the only forms of electronic payments. Mobile payments and stuff might come together down the road. But if you're not face to face with the customer, as is the case on the internet, now you have two modes. One where you are initiating a transaction and completing the transaction in the course of a sale, and the other where the merchant may need to charge you, say to pay your electricity bill or to charge you a monthly recurring fee for, say, a software as a service product. And in that situation, what happens is you're not necessarily interacting with the merchant's website, and the merchant needs to be able to complete the payment transaction without your being actively involved in the course of the transaction. And that last category is what we're talking about. In the US or in other parts of the world, you can register your card with the merchant, and the merchant has the ability to get the authorization done and complete the payment and just send you a receipt. In India, that does not seem like it's allowed, except in a few situations. So that's the background of today's call, today's Hangout. So Krish just stepped away from the computer. So Vasu, I'll start with you. You've been one of the veterans in this industry, right? So Krish is back. So let's go down the planned sequence. Krish, maybe you can talk a little bit about what ChargeB does and what are the situations you're facing, and explain to the audience where you feel like you're running into trouble and what some of the ramifications are. Over to you.
Thank you, Sanjay. So my name is Krish Subramaniam. I'm the co-founder and CEO of ChargeB. We are a subscription billing solution incorporated in India and Delaware. And what we do is we are a billing solution on top of 30 plus payment gateways worldwide. And we facilitate seamless accounts receivables management for subscription businesses. So which essentially means we help these businesses make the process of collecting payments from customers very easy with a click of a button. Now, having said that, our focus market is primarily global markets right now, except India. Now, the reason being the current regulation situation, which does not primarily allow us to do recurring payments for businesses that are based in India. So there are multiple aspects to it. One is if you are a business that is incorporated only in India and selling to Indian customers, then two-factor authentication is essential to be able to do every single transaction. So which means recurring payments does not happen between two parties in India. Similarly, if you are a business based in India and you are trying to sell to customers outside India, your options are limited. You have PayPal to checkout and probably SASE as one of the options. And these are businesses, payment gateways, which allow you to do recurring payments, but they have their own limitation in terms of the flexibility that they provide you to facilitate recurring payments. Right? So, which means you are at a disadvantage compared to a competitor outside India. Then the third aspect is if you are a business which are selling to both markets, and and if you are incorporated outside India and then you are trying to sell, then you work around these issues. So that's the current situation, right? So we can come back to this and then discuss more in detail.
Great, perfect. Thanks for setting up the problem. So Vasu, I mean, you've been in this business for as long as I know you, and that's been a long time. And I don't think there's been any sort of phase of evolution of this industry and business that you have not seen. So it would be great if you can shed light on how this has evolved, because in the past this was allowed, and where this actually stopped, and where we are today, and what's the current thinking. And any other comments you may want to make as well, which I didn't point out.
Okay. Thanks, Sanjay. I represent Bill Desk, and Bill Desk has been in the billing and payment over a decade now. We've, as you rightly seen, the evolution of this and the way the regulator and the banks have dealt with it. So first off, since I'm on this Hangout, is because I'll end up presenting a point of view that could be reasonably or significantly different from other opinions voiced here.
Most welcome.
Because my opening remark would be to say that recurring payments are pretty much allowed in India, and there's a huge volume of payments. I think there's a distinction to be made because to figure out what is payments. I think that's the core to the entire issue that I think that is being addressed now. But before, let me kind of trace through what happened 5 years ago in the Indian market, which has a significant bearing on the issues that I think the industry is facing now. 5 years ago, from just a card payment processing, India was no different. Merchants could accept cards, and the way the card process worked was similar to how the rest of the world was. Acceptance, and if there's a customer dispute, there was a global standard of chargebacks process that applied even in India. What happened around 2009, say important or the large e-commerce merchants of those days, thought that the charge merchants, and through various forum and agenda reached out effectively. The way this card business works is unfavorable to merchant, and there needs to be an intervention. RBI then formed a committee. I mean, this was one of the trigger points, I would assume, need not have been the trigger point, but one of the inputs that went across various forums. Committee of bankers to look at the issue and come up with. Remember, the committee in the deliberations was that India did not have any significant issue of fraud. Card acceptance was itself at very nascent levels, and therefore to worry about an issue of fraud or bring in intervention. But as goes with any policy or regulation, given that there was a segment which felt that they and their customers were getting impacted because of the now, irrespective of how second factor works, the second factor was resulted in a liability shift from the merchant to the bank, which was the key point that was being addressed at that point. The second factor that happened. Now, how second factor got but that was the genesis of the second factor. Also had.
Hey Vasu, you're very choppy. Do you mind maybe turning off the video? That might give you better bandwidth. Okay, so I think while Vasu is
let me try, but I think the network here.
okay, Vasu, we are not able to hear you. Let me paraphrase what I got till now. Hopefully, you can turn off video on your Hangout.
So I don't know if it gets a.
Oh, it's a lot better. Go
I'm
ahead.
hoping this will give you get a better band.
Okay, go ahead, continue. Can you just repeat the last part? Okay. So I think I'll just paraphrase while we try to get Vasu back online, and I really would like to get him to say all this. But he was is basically his point was that there is a substantial amount of recurring payments going on in it in certain categories, and recurring payments are actually allowed. It's just that today things are not the way they used to be, or they are in other parts of the world. So as recently as 5 years ago, as far as card payments were concerned, actually we supported all of the payment types that are allowed in other parts of the world. But there was a committee that reviewed sort of the risks of fraud in the Indian ecosystem, and I think that was largely with the objective of India has a very small credit card penetration, and there is a large number of debit cards. And so we were trying to see how can we get debit cards to be used online, because online is important. And when it comes to debit cards, security and fraud risk are quite a major concern because it's people's money that is at stake as opposed to a line of credit. And so that's when it was felt that stronger authentication would be required. And though India did not have any major fraud concerns at that point, second factor authentication was introduced, and that's when basically the card not present transactions, which were customer absent, got impacted. I think that's where Vasu was. I'll give him a couple of minutes.
Okay, Sanjay, I don't know if the audio is any better. Turned off the video, but I'm not sure if that gives a better audio. Am I audible?
Yes, go ahead, Vasu.
Okay. So, I'm sorry. I think I am, as I said, on a bad 3G connection, so I don't know, whether it gets choppy. So, irrespective of the sequence, let me quickly complete the few points that I want to make, even though it might be a little premature or out of order here, but so that at least I've put on table the points that I thought I should make.
Sure.
So, I think, as I was saying, so recurring payments do happen in India. There is a process for it, and the process is different for bank account-based, account number-based recurring payments and card account-based recurring payments. But I think, and given the context of the issue that we're trying to address, I think the first part is to figure out what all payments fall under the category of recurring payments. And there are 3 or 4 tests in the typical, if you look at a card network best practices guide, there are typically 3 or 4 characteristics what go on to define a recurring payment, which is essentially a known customer making a payment in favor of a known merchant using some form of a registered payment method, and the amounts having to go at predetermined intervals at the time of the customer setting up the recurring payment. I think the crux lies in the fourth aspect of what defines recurring payments, which is the predetermined frequency at which the debits to an account have to happen. That's the true nature of a recurring payment. So if you take a case like an electricity or a telephone bill payment or an insurance premium payment, the frequency is known. Month on month or bi-monthly basis, there will be a debit to the account. The amounts could vary because that's based on consumption. Whereas if you took a case like insurance premium, both the frequency and the amount. For these sectors, the
last part, Vasu, in the case of insurance, both the frequency and amount
are effectively predetermined, right? When you sign on an insurance policy, you know that every quarter you're going to make a payment of, let's say, 5,000 rupees towards insurance premium payment. So the frequency is known and the amount is known. Whereas for many other sectors, it's the frequency that's known, the amount is consumption based.
Correct.
When it happens on a card account, there is a process by which a customer is signed up for the card account for the debit, and thereafter recurring payments are made to happen. Now, in all these sectors, because there is an offline connect to the customer in some form, there is an underlying relationship. The typical sign-in into the process is based on either based on some form of a strong authentication, which is either a paper-based sign-up or a one-time online transaction that verifies the customer's card credentials, or a voice-based channel. Whichever way, that's the way customer enters the recurring billing relationship. Cutting to the, I think recurring payments happen, and there is actually, I said, an RBI. There was an RBI thought on even for a recurring payment, should a second factor get introduced? Right? This was debated a lot. Fortunately, given that this was again 4 or 5 years ago. Fortunately, at that point, the only parties who had a strong interest in recurring payments were the typical, as I said, the offline players, the utilities, the telcos, the insurance. And from all their perspective, the point that they put across was to say that we know our customer. There is a way we can access our customer, and a second factor impedes the ability to process recurring payment transactions. A second factor never came in, even though RBI originally intended it. I'm just taking their taken, or I think the crux lies in figuring out, do those fall under the category of recurring payments? Because to my mind, there are two different issues. Can recurring payments in India be processed without second factor payment? I think the answer is yes. But does a customer who registers his card, let's say with a merchant, and at infrequent or undeterminable intervals transacts with the merchant, wants the card debited, is that by definition a recurring payment? I think it's not. So to me, the issue is not whether recurring payment should be allowed in India, but I think that I would pose the question differently, at least the way I think of it, to say that if there is a way a merchant is able to identify a customer and store a card number, can they process transaction against the stored card number without a second factor authentication? And in such a transaction, should there be a risk? Who bears that risk?
Right.
I think
Vasu, that's a really good summary. Any other specific points you wanted to make?
I think pretty much that, and I just I don't know if Amitabh has joined or not, but just 30 seconds more. I think there have been a couple of forums and conferences with RBI on this factor, on this issue in the last 10-15 days, and I think the broad feeling that all ecosystem participants have got from the RBI interactions say that RBI is aware of the issue and is open to suggestions, but they need suggestions which they think will work for all categories of play. Like you pointed earlier, the larger debit card customer interests in mind.
Right. Right. Okay. So what you're saying is they are also looking for a solution, but there isn't really a solution that is currently being contemplated. I think I'd like probably Krish to ask you a question, Vasu, because all of the examples you talked about, whether it is a telecom player, whether it's a utility biller, or whether it's a insurance company, they kind of fall in the category of some sort of a utility or a biller of some sort. I think we have a lot of situations where we have customers that we are charging, say, 1,000 rupees per month for a business-to-business service, right? And the business entity, uses their ideally would like to pay with their credit card, and it is a recurring payment. It is a fixed frequency. It might even be a fixed amount, or it might be a variable amount. But it does not seem like those types of businesses are allowed to process with the card on file approach, where they just store card number and CVV and expiry date, even though they could do the first time strong authentication with a 3D secure process. Vasu, Krish, correct me if that is the situation, and maybe you can elaborate. And let's focus here only with Indian businesses, with Indian cardholders. We'll come to the other scenarios later.
Right. You summarized it perfectly. Right. Would love to hear Vasu's thoughts on that.
As I said, to my mind, I don't think that's prevented in India. If there's a recurring payment, and let's take the scenario outlined, which is for business that needs to make a monthly contribution or subscription, I feel pretty confident about stating that kind of recurring payments on through a credit card. It doesn't happen on a debit card, which is not from either regulatory or any other perspective, just let's say bank policy, but purely from a credit card perspective, these form of recurring payments are allowed.
Okay, and on debit card, it's not allowed because?
Let's just go back to India. They started. There was because debit cards were not such a big number 5 years ago. They left it for that this would get allowed, and historically, debit was neither allowed neither on the online channels nor on recurring. Over the last 5-7 years, debit over the online channel has got allowed. From dealing with the recurring on a debit card, recurring payment debit card, one of the challenges is unlike, which I don't think there's a line which says you can't, nor is there any regulatory view that there can't be. I think it's got to do more with existing bank processes. Unlike the credit card systems which evolved system and therefore one centralized system, debit cards in India have grown through banks through a branch network route. And over a period, while they've got centralized, the system is very closely linked to the core banking, which essentially means that interconnect with, say, an external world which seamlessly allows a debit card-based debit technically falls within the banks, did they allow it or not from a risk perspective.
So to summarize what you're saying, Vasu, is there is nothing regulatory-wise that says that recurring payments on debit or credit cards to merchants that are, let's say in this example, B2B merchants, is prevented from a regulatory perspective. From a risk and implementation perspective, a lot of debit cards might not be enabled for this. But it's not like we have to go to RBI and say, can you please enable this? It's really up to the individual issuers to decide if they want to enable it or not. Is that a fair?
That's a fair summary of what I stated. If I can just add one more point to which might help explain why banks think in that manner. We need to look at how the customer disputes get handled in credit versus debit. There's a huge difference there.
Right.
When a customer raises a dispute on a credit card, that's pretty much a bank's team that figures out how to handle it and how to.
Sorry, Vasu, can't hear you. I think this is not a good
issue.
Sorry, Vasu, not able to hear you.
Yeah. Okay. So we'll come back to
debit, which is linked to a bank account.
Right.
Current guidelines in banking.
Okay.
Sorry.
We're having some technical difficulties here. So Vasu, if you don't mind, I think we'll wait a little bit and have a couple of comments from Krish. And I'd also like to request the audience to start posting any questions you have in the chat window, and then I can request my panelists to answer it, or I could also answer some of them. So I think the big takeaway, which might be news for many of us in the industry, is really there is no regulatory thing that is preventing non-utility companies to also sign up customers for recurring payments, which can be done on the basis of a one-time strong authentication, either by a paper document or by a one-time 3D secure transaction. However, that might still be blocked by the issuer of the card, depending on their ability to manage the risk associated. And clearly, in the case of debit cards, there is a lot more concern about strong authentication. So it's probably more than likely that debit cards will not be usable, but credit card transactions should still go through, and there is no real category of the merchant that one needs to be under. It's just that you need to satisfy the 4 points that Vasu brought, which is it's a customer that is known to the merchant merchant that is known to the customer has registered a payment instrument, and there are at least predetermined instances and frequencies, and ideally predetermined amounts. Okay. So Krish, is this news to you?
It is news to me and to many of us, because what we understand is utilities as a category is allowed because it's very clearly stated in one of the regulations. I'm just trying to look up that regulation because it's very clearly allowed that utilities as a sector is allowed, but there's nothing that says, and motor transactions are allowed, but there's nothing that says that tech, there is, you could bring in another category that is possibly like tech or SaaS, which may be allowed. You may remember how Make My Trip, we understand how a very high risk sector like travel or some other industry where the fraud level is high could be stopped from doing it because the bank might feel like, okay, we need to protect the interest of one of the parties, right, of the consumer. But at the same time, we definitely do not know that tech is allowed, because we have tried this with HDFC and few other banks where it's very hard for you to get approvals from the bank to be able to do the transaction. And one of the instances when we were able to get approval from HDFC or one of the banks is...
By bank, you mean the acquiring bank, the payment gateway provider?
I mean the acquiring bank is to talk to them, and they were able to only get approval. They worked with the RBI to get approvals to do recurring for transactions from customers outside India, but not for transactions from customers in India. And that is a surprise to me that it is actually allowed. So it could either be, so there is definitely lack of clarity here if it is still allowed.
Okay. Hey Vasu, are you back on? Okay. Unfortunately, yeah, it doesn't seem like we have Vasu back on as yet. Amitabh, have you been able to join? Okay. All right. So I think I'll turn it on over to the audience for any Q&A. And there are any questions? I see one or two questions that have come in, right? But I think we've covered most of these topics. I think the one interesting question that came up is conversion from freemium to automatic billing after a trial period ends. How would one do that? Krish, I don't know if you asked this question or if you have an answer. How does this work outside?
So outside India, it is fairly straightforward. You do a $0 authorization, or there is a zero value authorization or like a ₹1 authorization, but you don't capture that amount and validate the card, store it as a valid card transaction. And when the customer gives their approval to say, I want to become a paying customer, at that time you would use that authorization token to reinitiate the transaction for whatever is the actual amount you need to start processing. That is the way in which it happens outside India. PayPal allows you to do it to a limited extent because they have support for free trial, but the trial period is fixed. But again, the transaction is specifically for a business in India to a customer outside India. That's the only one allowed by PayPal.
Okay.
That's the way in which it's done.
Okay, got it. Vasu, it looks like you're back online. Okay, I'm sorry, guys. In the audience, I think we are having a really interesting discussion, but Vasu has been having some technical difficulties, and I think Vodafone 4G is long overdue. Anyway, any questions from the people in the audience? There is a Q&A module. Feel free to ask your questions. We have about 10 minutes left in this Hangout. Or 15 minutes left in the Hangout, so please ask your questions now and I'll be happy to discuss them.
So, is it okay to start taking up questions that we see, Sanjay?
Yeah, please. Yeah, go ahead.
Okay. Tushar has asked a question about why can we not use a processor like PayPal or Stripe? To answer Tushar's question, you can use a processor like PayPal standard, as a business in India. So the context of the discussion is as a business in India, assuming you don't have an incorporation outside. In that context, you can use PayPal standard to collect payments from customers outside India. Of course, PayPal is not allowed to collect payments from customers for domestic transactions in India. Yeah, and Stripe does not. Stripe is a different model altogether, and they need you to have incorporation in the countries that they support. Right now, they support about 20 plus countries, but you need to have an incorporation in that country to be able to use Stripe.
Okay. There's another suggestion, which is, I guess, the only alternative right now, which is why can't they just use post-dated checks and use them with their bank? I think the short answer to that question is nobody wants to deal with the paper of, handling the check and then sending them to the bank, and and then the reconciliation that happens associated with it. Obviously a card-based payment is an automatic electronic payment. Money shows up in your bank account. There is electronic reconciliation. You don't have to worry about losing the check. All those issues, right? Also, the card payment actually protects the consumer as well, because technically, you could terminate the account or cancel the card, but if you issued a check, then there's money in the bank account, the check will be cleared unless you call the bank and cancel the check numbers. So I don't think that's really an option, and it would be a regressive step if you have to go back to that mode. It might be a last resolution for some of the companies, though. I think Tushar had another question. What's the status of card not present transactions without two-factor? I think that's what we've been discussing. So I think there's nothing more to add on that. Is the level of credit card fraud in India much higher than in other countries? I think the answer is, because we have strong authentication in India, we almost have no fraud, right? And certainly very little I didn't do the transaction fraud, right? I think that's the good part, right? And the fear is really, yes, that, I wouldn't say the fear, but once we are in this mode, I think the issue is that there has to be a solution for recurring payments. I think for interactive transactions, I don't think anybody is complaining about the fact that we have verified by Visa or an OTP-based process. I think when it was first launched, there were some issues, but those have been resolved. Really, the question is, in the case the customer is absent, let's find a solution for that. Sunit Kapoor has a question. Do we need? Sorry, that was Sumit's question. Manjunath's question is: do we need express consent for renewal of a recurring subscription, or can customer silence be used for auto renewal for subscription? I think, Krish, you should be the right one to answer this question, both based on what's happening in India and or what's allowed in other parts of the world and in India.
Sure. Right. So in the rest of the world, a silence is taken as a yes when it comes to automatic renewal of a subscription, and you can charge the customer, right? The provider use of service and clearly explicitly states that. But for a business that is incorporated in India and you want to charge customers outside India, you can still do it if it is within a 5% variance like PayPal allows, or you could use a solution like SASE, which allows variable billing to do automated recurring billing without consumer consent every single time. So silence is again taken as yes. But for domestic transaction between an Indian business and a customer in India, that is not possible without consumer's consent for every single transaction. That is where the two-factor authentication comes, and that kind of breaks the flow for a recurring transaction.
Yeah. So, Krish, from your experience of doing transactions overseas with your customers or on behalf of your customers, which are business entities, what type of chargeback and fraud rates do you see in various geographies? Do you have any numbers around that would be indicative here? I mean, after I presume they don't do 3D secure there, so it's quite likely that the first transaction could be a fraudulent transaction. But let's say 3 months into the customer's, it's the same customer, it's over and over again. At that point, do you see any risk of fraud? And it would be good to have both the numbers, first transaction versus recurring transactions.
Right. Right. That's an interesting question. So, business. Sorry, I hear a lot of echo.
Sorry, Krish, can't hear you.
Sorry, I just unmute. Yeah. In the case of B2B businesses, we see very less chargebacks across businesses. So this is less than 0.5% is what. And in the case of B2C business, high level of fraud when it comes to e-commerce. And many of them are actually identified as
Sorry, Krish, you're chopping in and out. Can you just try to repeat what you just said? Yeah. You said B2B is less than 0.5%. B2C is higher, but we couldn't hear you much.
Correct. So B2C is higher from a first transaction perspective. Sorry. Okay. Is it better?
Yeah, sounds better.
Okay.
Except that it looks like you're on a special.
Right. So in the case of B2C transactions, there is a higher level of fraud, still less than 1%. And many of them are identified in the first month of the transaction. Many of them are fairly easy when you see that when you enforce the address verification checks, you actually filter out most of them. The places where it occurs is when the address verification check is not enforced, and there are cases where the name match between card on file and the service being used by that person. So it will be totally dissimilar. Right? So there are ways in which it can be identified and resolved in the first month itself. Most of the cases, that's how it's happening. But what we do see is the first transaction goes through and then the subsequent transaction fails in lots of cases. And these businesses, what they do is they refund the transaction by the time the second transaction fails. And that's how it's addressed.
Okay, got it. So basically, I think it's consistent with our expectation here, right? That the first transaction is the most risky one, right? And in India, that's where, since there's an interactive registration, we could do a 3D secure transaction. And then the subsequent transactions can be recurring transactions, and there should be very little risk from a fraud perspective, right? Now, whether the bank systems are enabled or not, that's a completely separate point. Okay, let's go to the next question.
Right.
Do we need an express written consent? So we talked about that, right? So the next question is from Srinivasu. What are the standard customer support procedures that businesses will adhere to if RBI approves them to perform recurring charges? Do we have any industry standard like that? So let me take a stab at that. I wish Vasu was here because he is doing a lot of this. I think the expectation here from Mr. Srinivasan's question is that the first time there is a strong authentication that is done by the consumer, right? They sign up for the service, and that is a regular verified by Visa transaction or a 3D secure transaction to be correct to all partners. And subsequently, it's the same card being used for the same merchant. So I think the merchants would expect that the liability of chargeback should still be on the consumer, but I think that is something that may need to be debated. Right, the merchant might be willing to take the liability risk if he is allowed to process the payments. So I think the the consumer is in general protected because their card can never be registered unless they do a full 3D secure transaction. But then after that, recurring transactions, one would expect that the merchant will probably send a notification. So I use this all the time, by the way. I'm using Visa Bill Pay, which is actually a service run by BillDesk on behalf of Visa. And Vasu would have been able to talk about this. This morning itself, so my electricity bill and my landline are actually paid automatically. The way it worked is I did a 3D registered my card and said I authorize up to X amount per month to be charged without my requiring any further authorization. And what happens now is about 3 days before the bill is due, I get an email stating this bill is going to be paid out. This is the amount, and either I can stop it, or if I don't do anything, then 4 days later I get an email saying your bill has been paid on your card. And of course, I would have still received the SMS from the bank saying your card has been debited, 2,000 rupees, whatever is the amount. So I think the customer, we're living in a world where the customer gets both SMS and email alerts, especially most will get SMS alerts, both before the transaction and post the transaction. So there's plenty of opportunity for the customer to stop the transaction. I wouldn't say there's an industry standard, but what Visa Bill Pay is doing, which is what BillDesk has developed for them, is probably something that could be used as a standard, at least as a starting point. His next question from Ketan Parekh. Business gets a credit card only after going through the credit control process like any loan. This is too much of a hassle. I'm sorry, that's nothing I can do. How can we bypass this to be able to use a credit card for a B2B transaction? I don't necessarily see the correlation between the two. Maybe I'm missing something here. Krish, do you have any point of view on this? Otherwise, we can move to the next
question. But I think the way to do that would be to take a have a fixed deposit and take a credit card, take a secure card, secure. That's the only way in which some business. Right?
Okay. Okay, next question from Sandeep Todi. Hi Sandeep, how are you? Thanks for the question. Are there any success stories using ECS for B2B payments? What kind of permissions, approvals are required for the vendor, customer, bank to comply with? Really, I think there are a lot of examples here, but Vasu is the right person to answer this. I think ECS typically involves a mandate that has to be filled out in writing, and it typically takes a 2 to 3 week process before it is registered and activated, which might still be acceptable. But I am not sure if it's if it's being used very widely, except in a consumer to business payments. I don't know if B2B are using it. I wish we had Vasu online. Vasu, if you're on the call, if you can even just respond through chat, I'm happy to relay the answer. Otherwise, we can take this offline and post an answer on the YouTube. I think Sumit's question was exactly what we've been discussing, the status of card not present transactions without 2FA. Sumit, the short answer is, in principle, they are allowed for recurring payments for credit cards, but most banks do not allow this for debit cards. Where can I get a big picture 101 on how credit cards settle, parties involved? Do answer if you feel relevant, from Santosh. It's an interesting question. Very high level, in any card-based transaction, there are 4 parties involved. There is the issuer, there is the acquirer, there's the merchant, there's the consumer. The acquirer has an account with the merchant, the consumer has the account with the issuer. And by being members of either Visa or Mastercard or RuPay or whichever scheme, there is interconnectivity or interoperability between all the members in the scheme. So when a consumer uses a card issued by, say, ICICI Bank on a merchant terminal or on a payment gateway merchant that has been signed up by HDFC Bank, for example, because it's not a HDFC Bank card, HDFC will send the transaction to Visa. Visa will go to ICICI Bank, get the authentication and authorization done, and confirm to the merchant that the transaction was successful. And typically, at the end of the day, there's a settlement process which does a net settlement between the banks. Right? So that's at a very high level how it's done, and could be a topic for a future hangout. Good. I think we've exhausted all the questions, and I apologize we weren't able to add a couple of the participants for most of the call. But thanks everyone for your participation. And I think the quick takeaway here is definitely there is a need for recurring payments in India for B2B scenarios in particular, or B2C scenarios as well. There is, I think the new learning for all of us from Vasu was that technically it is allowed for credit cards as long as it is a true recurring payment, which means the frequency is also known, and on the basis of a one-time strong registration. There is no regulation per se that prevents it from being done for debit cards, but from a risk perspective, most of the issuing banks may have, and for other technical reasons, they may be preventing it. And lastly, while this is allowed for most of the billers, it is only allowed for truly recurring payments. So something like an Uber where you register for the service and then you walk out of the cab today, that does not come under the umbrella of what is a true recurring payment.
There is pay as it goes. Is not recurring.
So it's not recurring. Correct. Pay as you go is not a recurring payment, though it's in some sense a trusted merchant. I think that's the broader umbrella, right? And I think there's a distinction being made here between, say, a trusted merchant and a recurring payment.
Correct.
There's one last question or a comment that's come up saying, non-IT population customers rarely use email, do not have smartphones, find these people finding it tough to move to recurring charges. They're comfortable with one-time payments. Well, I would just say then don't do recurring charges if you're not comfortable with it, right? I think the ability of the merchant to be able to offer that as a service to the customer is what we're discussing. Clearly, if the customer is not comfortable with it, they should not be signing up for it, right? So I don't see that fundamentally as an issue because it's really up to the customer to decide do they want to opt in for this service. Great. Well, thanks everybody. And Krish, thank you. If you had any closing remarks you'd like to make, and please go ahead.
Sure. From a SaaS company startup perspective, we have to follow up on the ability to do recurring for B2B transactions. That was to learn more about that as a follow-up to this discussion. And take this for that would be necessary controls.
Great, thank you. Again, thanks everyone for the audience. I think this was scheduled to be 45 minutes, we've gone a little over, but we had a lot of questions, and I'm glad to have all of you on the call, and look forward to our next hangout. Cheers.
Thank you so much.